Welcome to the Payment Shed podcast, the weekly podcast that dives into the big topics, trends, and people shaping the worlds of payments, fintech, and business leadership, with your two co-hosts, myself, Grant Evans, and Justin Hanna. Today we're joined by Jack Mangnall, co-founder of Shape Technologies. Jack, welcome to the Payment Shed. Can you introduce yourself, please?
Hi, I'm Jack Mangnall, co-founder of Shape Technologies. I've worked in payments for about 5 years now, always focused on helping ISVs, vertical focused SaaS companies, call them what you like, create and deliver their payment strategies, whether that's working through payment gateway companies, open banking providers. That's always where I focused. Clearly had the pleasure of working with you guys at acquired.com for just about a year, which was great. Still stand by the fact that it's the best job I ever had. It was a really good team of people and it was good. But we founded Shape 2 years ago with a mission to get payments businesses to market quicker. And I'm sure I'll get some opportunities to tell you more about Shape today.
Okay, very good. Thanks for that intro. And I think that kind of ties in nicely to the topic we've got today, which is the biggest race in payments, embedded payments. Can you just maybe delve into a little bit about what you've built at Shape and how that kind of lines up with the embedded payments ecosystem?
Yeah, I would love to. It's a great question. So with Shape, our mission was to build a payments platform as a service which can get different types of payments businesses to market much quicker. So when we started 2 years ago, it was all about PayFacs. So the likes of Visa and MasterCard were spending lots of money, time and energy telling everyone in UK and Europe that the PayFac model was going to be the next wave of innovation in this market because they'd seen what was happening in the United States, with PayFac and PayFac as a service, some great companies doing awesome things. But if you fast forward to today, we've not seen that emergence of PayFacs due to regulatory challenges. Fragmented market in Europe is quite hard to do, right? And there's clearly some big product requirements that we're trying to solve. But because we've not seen that wave of PayFacs, we've seen more dynamic use cases of ISOs using parts of our platform and ISVs. But the way we position ourselves as a pure tech player in the market is a technical ally to the more traditional acquirers that are probably struggling to compete with the likes of Stripe, the likes of Adyen. So we really wanted to help those acquirers go to market. But it became clear to us very early in our journey that the race in Europe wasn't really necessarily the PayFac race. That was just one piece of the puzzle. The race is to deliver embedded payments. But when you actually look at companies that are trying to deliver embedded payments, we're not really seeing great progress being made, in our opinion, because we spend a lot of time. So we set out to solve the embedded payments challenge, which we are now doing. So we have a standalone platform today, which enables a PSP to have their own dedicated platform. But we're now developing the ability to drop in our platform into software natively, which we can talk about later.
It's quite interesting that I think from my time selling, acquiring, when people talk about RPF, it's always been, it has to be a minimum turnover of 250 million to be a PayFac. And people start realizing very quickly, there's not that many businesses that just going to start processing 250 million. That thresholds then come down and down and down to the point where people are just desperate for anyone to be a PayFac. Please come on, be a PayFac and go and be a reseller of our services.
Yeah.
It's just not as easy as what you mentioned before, as what people think it's going to be.
No, just get in. If you look at the UK market, the capital that you need to put to one side just to become an authorized payment institution, something like 350k with the bonds and things you need to put up. So you need to be really committed and you need to have a merchant base in place already, I'd say, before you go and become a PayFac. Starting from a standing start would be challenging. So graduating from referrer to ISO to PayFac, it's a nice transition, but just starting from a standing start is really hard to do.
Can we blame some high-risk providers for damaging the PayFac model because they're passporting on these acquiring licenses?
Yeah.
Just hammering high risk through it, right?
So our take on that is when you go and talk to acquirers about PayFacs, they absolutely want to work with PayFacs. They see the opportunity, but sometimes they're afraid to support a new PayFac because we need the visibility. Sometimes they only want to work in really low-risk sectors because they're just so afraid of getting burnt because they have been burnt in the past by high-risk providers. But again, all those challenges are solvable. You don't have to lose visibility of what you're processing just because you're working with PayFacs. But it's a good point.
And how would you say that embedded payment model differs from a more traditional payment integration? Is it kind of leaning into the fact it's more of a B2B approach?
Well, my take on a traditional payment integration from when I've done it earlier on in my career is a software company can embed a payment gateway, like a checkout page. And so whether it's a B2B space, B2C, They are literally just serving a payment page and trying to make it a little bit easier for merchants to accept payments. That for me is the most like simple process. But what that means is then the merchants have other interfaces where they need to go and manage their business from a payments point of view. They might have a banking provider, they might have a payment gateway, and a bunch of other stuff. Embedded payments for me means actually embedding the full payment stack into your software to make your merchant's life easier. So not just having a payment gateway, but serving the transaction data table, the ability to manage transactions, the ability to maybe manage chargebacks, the whole onboarding journey. So it's actually taking everything that you'd expect to see in a payments platform, but serving it natively in your software so that the merchants don't really know what's happening. They're just seeing payments as part of that software.
B2B to B to B to C.
Yeah,
right?
yeah.
So you mentioned about the benefits. What's the challenges of trying to, because not many players are doing it today, right?
Yeah, that's true. I think just going back to the benefits there, if that's okay, because I think it's important. When you look at the successes that are being done, I think it's ISVs that have really taken on that technical burden themselves. So Shopify, no secret. There's loads of public information on them. In the Financial Times, there's an article that says something like 60% of their total revenue comes from processing payments. Toast, another example, I think something like 80% of their revenue comes from financial services. And then when you look at JPMorgan, did a sector spotlight on embedded payments, and they say that any vertical focused SaaS company has the opportunity to convert 50% of their total revenue from payment processing. So if you're a software company doing like £1 million today, you could be leaving 500 grand on the table from not embedding payments. So the opportunity is huge. And yes, there's challenges, but if you're the software company, you can be stickier just by offering payments to your customers. And then the benefits to the merchants, I think we've kind of already spoken about those, but having everything in one place, getting easy to get set up. Ultimately, you just want to, when you're starting a new business, a small business, say if you're opening a gym, one of the first things you're going to do other than buying or leasing the premises is getting the software to run your gym, to manage your customers. The last thing you think about is processing payments, because outside of our industry, people don't really care about payments. It just needs to work. So when you're signing up for your software, if it just comes with payments inbuilt, you haven't got to go elsewhere to find a provider. It's just giving small businesses a much better experience.
It also removes that element probably of that was the point where, we've seen this over the years working with different acquirers, PSPs, whatever, where you're absolutely right. Like payments does become that afterthought. It's something, oh crap, we've forgotten payments, which is pretty core to running our business, right? And then there would have been a process of going and getting quotes, speaking to lots of different providers. Then you're doing an independent gateway integration potentially. You need a web developer for that if you don't have the in-house resource. The timing becomes stressful because it's become an afterthought, and then you're panicking, oh, are we going to be able to actually take payments? These SaaS platforms, these ISVs, have seized on an opportunity in that moment to say, you don't need to worry about that. And then you get into that conversation around merchant of record, where there's even less heavy lifting potentially, although the platform takes the liability, right? But they can set someone live with payments pretty much instantly because they've got the active integration embedded into their software. And with the embedded payment model, even like you say, you can still get a merchant ID generally very, very quickly these days, even without being a pay fac. So the question in there ultimately is that has driven a higher price point probably for payments for the end merchant through these SaaS providers. Are you seeing that trend?
Absolutely. But I think there's a good thing in that when you're in payments, it always feels like in certain sectors, it can be a real race to the bottom, like you're just competing on price all the time. But actually merchants, if they're getting a good experience, getting a good service, a good solution, they're quite happy to pay a premium. Yes, it might not need to be 1.5%. It could be maybe 1% or something. So I think one of our missions is making great technology available to more payment service providers so they can go to market with compelling solutions, which will see maybe fairer pricing, but it definitely doesn't need to be a race to the bottom, because if I'm signing up for software, if you're taking a fee for every pound that I process or every euro or dollar, I probably don't mind that so much. So they're not looking at it as a metric. And I also think if you can commercialize payments as a software company, it gives you some really nice plays that you can use when you go to market. So depending on what your mission is as a software company, if you just want to scale en masse your software, why not give your software away for free? As long as they're taking your payment processing solution, let them sign up for your software for nothing a month.
It's quite interesting. I think the payments industry, we see it as a commodity a lot of the time because you're just selling gateway and acquiring. Then all of a sudden, that same merchant is then using 5 other providers for 5 other functionalities of their business. And like you mentioned, embedded payments is trying to bring that all together. And actually the cost of every single one of these different services you're using may seem expensive when you say off the bat.
Yeah.
But actually you'll have in one product to do everything for you.
Yeah.
And I think when you talk about, Shopify in particular with this, what have they got so right with embedded payments? Why are they the market leader?
From my point of view, they've done a lot of heavy lifting themselves. So the ISVs, the software companies that have really won here, they've become payments companies. They've hired the right expertise. Because when I see smaller, mid-sized ISVs, they might think to hire maybe a commercial person, someone like myself before starting Shape, right, to go and help them win customers, to win merchants, to convert them onto ISO models and things. But if you actually want to start building it into your product, you need to hire product people, tech people, maybe risk people. And so you need to have a lot of money to invest to get the right people in. And you need to be able to sweat that out for a year or 2 or 3 years, maybe, to make it successful. So big companies can do that. Like big ISVs are able to do this. But when you're medium, small ISVs, you still have the opportunity, but you probably can't go and hire 5 people to make this work. You kind of need to be able to take some steps to make it possible. So there's lots of different commercial models that can wrap around embedded payments, which I think is sometimes what ISVs get a little bit hung up on. They think they need to go the whole hog when actually they could just dip their toe and start making some money from it through working through some different commercial models. So I think mid-sized ISVs don't want to build loads of tech. They just want a way to simply embed payments and get going. But PSPs aren't really doing enough to meet them in the middle. So if I can just keep rolling with this, because we've seen lots of acquirers, if they've got really legacy platforms, they might not even have APIs to do merchant onboarding. You spoke about it earlier. Yes, it's becoming more and more common, but there are still like paper-based application forms with some acquirers, which is 2025, that just shouldn't be the thing, right? But what acquirers have raced to do is provide a suite of APIs. And we know this firsthand, right? So an ISV might be happy to integrate a checkout page, but when you say to them, here's an onboarding API, they still need somewhere to collect the data from the applicants. And then they still need to submit it and get the response back. How's that mid somewhere? And then when you say to them, oh, what about the transaction data? Where's that going to sit in your software? Here's an API to collect all the information, but you still need to do a lot of heavy lifting, even if there's a suite of APIs. So ISVs aren't willing to go that whole way of embedding everything you need to have a full stack payment solution. That's how we see it.
And how do you handle that? I mean, you've obviously gone from selling to merchants and platforms to selling very B2B the other way to acquirers, to PSPs, and you're almost asking them a difficult question because you're leading to a degree with your APIs aren't very good, or the stuff that sits around them isn't very strong, right? We're here to help you solve that problem. Starting with a slight criticism is a difficult sales pitch, right? How do you navigate that?
Got to find the right people. So we've been really fortunate to get some real key stakeholders. And then you just hang on to them with all your might and make sure they don't leave that company, or if they leave, you follow them. Because all it takes is a few people to really get it, to understand it and be open to the fact that maybe they're not capable of building, or not capable, but they're just busy, aren't they? You know, if you're a big acquirer, just keeping everything up and running is a big task. To create new innovation is actually really hard. So sometimes having an external technical partner, someone like Shape, can really help them pivot. We do get the objections, we just want to, they'll take a look at our platform and think, we'll just go and build that. 6 months later, they come back. So you just kind of have to run that course, show them what they could have, let them go and try and work out how to build it, run an RFP maybe, and then they come back and say, actually, yeah, that's quite hard to do. Can we just work with you guys?
Build versus buy debate that
comes
we see
up all the time.
Every day, isn't it?
Yeah.
Every day.
But another way to look at it is, you've got, when you're doing your sales, which Justin, you talk a lot about in all your content, which is great, by the way, you have chief product officers, chief technology officers, founders, chief revenue officers. They're all really important in the Shape sell. You need all of them to buy into how Shape can help that acquirer win. But the one thing that seems to be popping up all the time is that acquirer has already decided that they want to be winning in embedded payments. And we can help that acquirer win in embedded payments through direct to market, ISOs, PayFacs, referrals, any commercial model they want to support, we can help them with. So really, as long as we get in the door, once they see our platform, it's quite an easy conversation to have. Sorry, this isn't meant to be too much of a...
Fine. One thing I've definitely seen, obviously from a direct sales perspective, is I'm speaking to more and more businesses that are now utilizing their platforms that they use from CRM perspective because they've started to monetize payments. We've probably flipped it a little bit and said, I now feel like I'm trying to sell to embedded platforms, even though I normally go directly to the merchant, because there's probably more reliance for some businesses on their CRM platform than there is on their payments provider.
Yeah.
So actually our mindset's having to change. Great for Grant, not so good for direct sales, is you're now trying to convince these platforms who probably aren't monetizing payments that much that they should be monetizing payments.
Yeah.
Web development agencies, the key players for this, right?
Yeah.
They're building businesses' websites and have not even thought, actually, I could go and speak to a payments provider here. They're just integrating to A or B and then moving on with it.
Yeah.
I would call them like the new age gatekeepers I have called them the new age gatekeepers of payments. And I did work in direct sales teams for a long time. Not sure I'd want to go back into that world at the moment. And that's not just because I work in partnerships. It's because I've seen that evolution. You talk about Jim SaaS, but you can apply this to so many SaaS verticals where now these platforms are maybe starting as an independent sales organization or as an ISO. They get a bit frustrated with that clunky onboarding process that you talk about. And you think, well, let's take this to the next level with a fully embedded solution. And when you get to that stage, as a payments company selling direct to merchant, you now have a very, very hardline gatekeeper to that end customer, because if I'm Grant, the BD on the road back in the day, and I go and knock on that gym's door, the first thing they're going to say is, hey, you're going to need to speak to our gym platform because all of our payments run through that. And that narrative is kind of trickling across lots and lots of different SaaS verticals at the moment.
I don't think you need to worry too much though, Justin. The direct sales function, like we've done this before together, the bigger businesses want that direct support. They need advice, they need consultancy, they need to be steered, and they probably want recommendations on what software to use, which I know you can help them with. But when you're trying to target thousands of small businesses, no one's going to go around and see every single business. You find the software that they're using and work with that software company to deploy the right solution for thousands of small businesses.
I feel like when I go and speak to merchants, some of them want to try and build it themselves. But it's a similar challenge to what you'll probably have when you're selling to payments providers is, well, it's working, not great, it's working. And for us to now build on the side, it's going to cost us a lot of money and a lot of time.
Yeah, I think it depends on the vertical and the use case. Like when I'm thinking embedded payments, my mind goes to leisure centers, gym software, software to run your vet, software to run your pharmacy, things like that, where embedding payments into their software is the key. When you're looking at a bigger business, they probably, if they're a really sizable business, they're probably using multiple software platforms to run their business, aren't they? And so I think then, yes, they might need to do some building of their own to bring everything that they're doing together. Where we're trying to solve is that vertical software platform that's got thousands of businesses using their software, but they all just want to take payments through it as well.
Does that fall into the buzzword of omnichannel as well when it comes to the platforms they're using?
Yeah, I hate buzzwords. Come on to that later. But yeah, omnichannel, I think you have to be offering omnichannel. I don't think if you're looking to support small businesses, very, very few are doing just bricks and mortar or just online. I think you need to be able to offer both if you want to go out to market en masse.
And vets would definitely benefit from that, right? Because you go in store, you're paying your insurance excess, and then you're getting a link to pick up the tablets, and you're going online to pay for your appointment. And actually, that must be a real headache for a finance or operations department when you've got one customer that within 3 days has paid 3 different channels of payment. So being able to have a platform to bring that all in.
Yeah, to reconcile that is an absolute mission. Yeah. And they quite often they don't actually know what money they've got. My partner's got her own hypnobirthing business. Small thing, but she does really well. Shouldn't say anything bad about her here, right? But honestly, she works with I won't name them, a payments company, and they're really good, one of the best at what they do. But she actually doesn't know what money she's got coming in and when, because she just finds it quite hard to track sometimes. And I think offering small businesses that transparency is actually really key. And I think it's quite hard to find in payments.
There's a little bit of a, I will say laziness to it in the sense that you create this all singing, all dancing embedded solution. And then you maybe say, oh, well, 10% of our throughputs on point of sale, but that 10% for the finance team or whoever's responsible for reconciling is a real pain in the ass, to be honest, because you see it in dentists. I go to the dentist, it's a standalone device, they put it out, I'm like, that reception person is then having to go into a system to confirm the payments being made, but then how does that all flow back to the finance team? If you're going to integrate a PSP and go down that embedded route, you then probably, unfortunately, have to go and get accredited with a specific terminal range from whichever manufacturer you decide to go into that process with. The acquirer has to then approve your accreditation. Like, you start having those conversations. I understand sometimes why an ISV is then like, let's just do e-com. It's quicker, it's easier, it's faster route to market.
It is an easier place to start. Yeah, for sure.
But then they may never get round to the POS side of things, right?
That is the danger, yeah. But I think if you're outsourcing a lot of the product build, then it's easier to say yes and go in steps. If you're having to burden your own tech team, building it onto your own roadmap, then those slippages definitely happen.
Yeah. Okay. And so we talk about, embedded payments being such a big win. There are ISVs that have still stayed within that ISO sort of bucket, if you like. What's keeping them on the fence? Is it development resource? Is it not having companies like you that they can buy from and not enough in the market? Like, why are they still stuck in that position?
I think there's lots of different reasons for all these different companies. My biggest thing would be the product side. So showing an ISV a bunch of APIs that they've got to go and work with doesn't really do enough. I think PSPs need to go further. They need to kind of meet these software companies halfway. So one thing that we've now done with our platform, for instance, which other companies are welcome to do as well, we've taken our platform, which is fully configurable, got loads of automation, all this good stuff that we spent a couple of years building, which is that standalone platform. And yes, there's APIs to integrate with, but we've now created, or due to release soon, embeddable web components. So any part of the Shape platform in 3 really short steps, like copying a script in, dragging it. I'm not a tech guy, by the way, but they can literally just drag in one line of code into their software and have any element of the Shape platform appear in their software as like a native solution. So if you want to just drag and drop a transaction table into your software, it's really simple to do. So we can enable software companies working with any PSP, if the PSP is working with Shape, to embed proper chunks of payments capability into their software in moments. They don't have to plan it into a roadmap and spend the next 6 months building out a payments proposition. Just drag and drop this stuff in. So I think payments companies need to be going further to meet the ISVs from a product side. You guys will have some good take on this. I think ISVs see payments as a huge unknown. What does it even mean? Do I need to get regulated? PCI, what level of PCI do I need to get to? That comes up all the time when we're talking to software companies. It's nowhere near as scary as what these guys think it is. But I don't know if there's scaremongering going on, but there definitely is a case that there's a huge risk, a perceived risk, which actually isn't there. And if you work out how heavy an ISV wants to go with payments, you can work out the right commercial model that's right for them. The product requirements can be quite similar. In terms of onboarding a merchant, whether you're operating on a merchant of record model, PayFac model, or ISO, you can still onboard merchants quite quickly. It's just where that decisioning logic, the automation lies. So I think you just need to spend time educating ISVs on the fact that the risk isn't as big as you may think it is.
I think the merchant of record bit's probably, we've seen definitely a rise in the number of merchant of records that we're seeing in market, and they use a dynamic descriptor to avoid chargebacks. So you have to have their name, and then they'll put some abbreviated name of either of themselves or the end customer that they're processing for on that statement descriptor, so that me buying my pair of trainers still thinks I'm buying them from the trainer retailer, not the merchant of record fulfilling that.
That's quite old
transaction.
School though, isn't it? It's quite old school, this whole, although people rave that dynamic descriptors is really modern, it's actually really simple things that we're having to try and tell a customer. On your bank statement, it's going to say you brought your trains from 123 Limited. You can only have 16 to 21 digits. When you think how far payments has come and modernised, there's still so many issues when it comes to dynamic descriptors. There's just got to be something we can do. So actually, you can have more than 16 digits.
Yeah, I think some acquirers will allow you to have up to 25. That includes your space. The Payment Shed podcast is proudly sponsored by Tammy AI, the market intelligence and lead generation platform built for sales and marketing teams who want precision, not guesswork. Tammy helps businesses identify their best fit prospects, gain deep market insights, and boost revenue growth. and it really has become the go-to solution for the payments and fintech industries. Both Justin and I have used the tool in previous organisations that we've been in, and we really can't recommend it highly enough. There's a link in the bio to click on the Tammy website and find out more about their product. You really won't regret it.
Yeah,
all that. So it's limiting when you've got to get
two.
2 business names in there. It's definitely restrictive. But I think the other thing for me on merchant of record is the understanding of taking on that chargeback exposure, right? You are responsible as the merchant of record, or you can call it PayFac Lite. Some would probably term merchant of record even to be a version of PayFac Lite these days, but you're taking on a huge amount of liability. If you're merchant of record and you scale to, from tens of customers to hundreds or thousands, your potential liability, but also from an acquirer supporting you as a merchant of record, they are taking on innate risk as well, because they don't necessarily know, again, who your end customers are. So it's kind of a weird breakout segment of payments, merchant of record, and maybe it probably needs more eyes on it. But what's your view on that as a kind of interim product?
Yeah, not to go too heavy on it, but the way you finish there, it needs more eyes on it. I definitely think the merchant of record model needs a closer look. I think we see companies doing it where maybe they shouldn't always be doing it. I think because becoming an authorized payment institution, a PayFac, if you like, in UK and European markets is a significant challenge, people are seeing MOR as a shortcut to doing that, and it's kind of giving them a light touch, PayFac Lite, if you like. But actually, people are maybe not always doing it the right way.
So some of these are slipping through risk and compliance nets.
Yeah, I think so.
It's a mass merchant of record piece.
Yeah, I don't want to cause any headlines, but we speak to lots of different consultants, and there's so many merchant of record models in marketplaces and things like that now where probably shouldn't be. It should be people should be taking a closer look at that model.
And is that partially linked as well to, when you talk about marketplaces particularly, again, payment companies or not enough payment companies probably building out split payment functionality at source, so the EMIs that sit behind payments have risen to a huge scale in the UK, where there's lots of different EMIs in the market that will allow you to have multiple funding accounts, settlement accounts, payments accounts for disbursements, and these ISVs or platforms have basically built that payout functionality themselves behind their front level merchant of record, merchant ID. Maybe that's on us as a payments industry that we've not delivered that split payment functionality at scale across multiple providers quickly enough.
Really, it's not that difficult to achieve either, is it? Splitting payments, I think, is actually quite an achievable thing to deliver. But I also think it's a point of onboarding. So onboarding and verifying thousands of small businesses can cost money, especially when you're relying on manual processes to do it. Like, who is going to want to onboard and verify thousands of small traders manually? And these acquirers that want that business, they know the easiest way for them to do that is through that merchant of record model, where they're not having to verify every single sole trader on that platform, but perhaps they should be. And perhaps if they had the right tools to do it, they would. So I actually think that comes back to product capability. Like, all the tools are there. There's amazing onboarding and verification solutions on the marketplace. I just don't think they're being used. And one thing we found, when we started Shape, we launched our onboarding and verified modules first. We thought, let's sell these solutions before the rest of the platform's ready, because they're good in their own right. But what becomes quite clear is big payments companies don't like spending much money onboarding customers. Like, they don't want to spend huge amounts just to onboard a customer. Like, it's one of the parts of the business that they don't want to say neglect, but maybe it is neglect. They like having the processing volume, but getting customers onto their books quickly, they've never invested heavily into it.
What's crazy, if I rewind 15 years ago, my role when I first came into payments was getting a paper application and typing every single part of that paper application into a system. You put address details, KYC, you put in the driver license number, you press submit, it goes to another system and creates a mid within 24 hours, right? Right now,
15 years ago, you were getting a mid in 24 hours.
15 years ago, it goes through credit risk when it's low
I don't
risk.
believe you.
and still now, it's still taking, for most businesses, to go through that process, 24 hours, if not longer. So we talk about how well payments has come on over time. It's still taking 24 hours with 95% of payment businesses to get that mid live. And yes, it's probably cheaper now where you're cutting the cost of paper applications, etc. But it's still the time and effort is going in via different systems. So maybe we think
different systems, but also different people in different departments potentially looking at that application. Like, you talk about them not wanting to spend money. What's the cost of 3 different members of staff maybe having to look at one single application versus an automated tool that does it for you.
But there's not much that a human can do in terms of that decision-making process that you can't program like software to do for you. So you can still take into account what every single department wants to happen when the merchant application comes through, but you can build rule sets that automate that decisioning, and you can automatically approve all of your customers that are on a happy path. But even then, just like the outliers that you still want to get human eyes on it to make a final decision, like, so you can still like automate, and not in a day, like in real time, you should be able to, and let's face it, there's companies doing it.
Yeah,
right?
absolutely.
You can do it in real time and still maybe take a day to look at the others. And one thing that we advise against, because it doesn't need to be the case, is providing mids whilst doing your deeper checks whilst they're processing. So before you settle funds to your merchants or sub-merchants, don't carry on doing your verification checks. You can do it all up front before you give them a mid.
I think people don't do that because they're scared of duplicating work. But it's the same way you say, when a merchant's going through getting their mid, they're also integrating at the same time.
Yeah.
Right. And they should be working in parallel with each other when it comes to onboarding, especially low risk business, which is leading down the happy path, like you mentioned.
Yeah.
Why do we have to wait for a mid before onboarding or before implementing, and vice versa?
Yeah. In the software world, the businesses that are using the software aren't integrating into anything. They're just going to pay for some software.
That's embedded payments. That's the best, right? That's the future.
Yeah.
So what capabilities or partnerships specifically do you think are helping certain PSPs to outpace others in the market?
Well, the commercial models for sure, right? So if you're a PayFac and you're going to market offering PayFac as a service, which in my mind is basically software companies referring a merchant into the PayFac. I think it's got a nice name, but it's not really that different to ISO models and things like that. It's still referring a business to another payments business, and there might be some nice onboarding tools. But I definitely think the emergence of MOR, whether you like it, we've spoken about it already. There's lots of different commercial models which are helping, but I think it's more about the product capability, and we are seeing more PayFacs coming to market offering a better suite of APIs, which makes a big difference. When we look at the success that the US has had, clearly there's more PayFacs and PayFac as a service, but I still think that the product capabilities that we have available in the UK and European markets are really good. I think the regulatory side of things is a big hurdle for us. If you look at, I think PSE, the consultants, they published an article which said of UK SMBs, 22% of them have received a finance offer in software, whereas in the United States it's like 61%. So you can see how much further they are ahead at embedding financial products, probably because it's a little bit lighter touch on the regulation, right? But I think there's a lot of work we need to do, but I don't think the onus should be on the software companies. I think it should be on the PSPs, the payments companies, to build out more product capability.
That's a really good point there, because we've talked about embedded payments specifically, but embedded finance, overarching embedded payments. Like, what's your take on the way the market's kind of shifting towards that embedded finance model as well?
So I see, I would say this because this is where I sit, right? But the embedded payments is like the gateway to all the other embedded finance products that you could be offering. And if you think, God, I don't like it all to be about money making, right? But let's face it, you're doing this to make money as a software company, aren't you? Right? And get stickier, keep your customers. But if you can successfully deliver a payment strategy, why can't you start lending to those businesses a year from now? Why can't you start issuing cards to them, like issuing wallet solutions and things? So I think if you can deploy a successful payment strategy, it's just the start. Like, you can start offering so many more financial products.
You say yeah, but I've seen payments companies lending as quickly as a week these days as well, right? Yeah. So they don't need that much customer data. And there's probably, we haven't talked about AI yet, and we have to get something in there about it, but some of the benefits of AI and open banking as well that can potentially be helping in that embedded lending sort of part of the market is quite interesting as well.
Open banking is a huge piece there, and open finance, right? You're seeing the business, you're seeing the process, and seeing individuals behind the business. You should know whether or not you want to be able to lend that business, because you're seeing them in real time.
The AISP side of open banking, I absolutely love. Being able to do that income and expenditure assessments of consumers and things like that, to be able to make a decision of whether you want to lend to them. I think it's amazing.
Are you partnering in that area at
Yeah,
Shape?
we are. Like, I don't know how much you know about Shape, but like, we're not a payment gateway. We integrate with gateways, we integrate with acquirers, banking providers, but we've always wanted to be not just partner agnostic, but payment method agnostic. So open banking providers, not just for AISB, but the PISB side. It was crypto, but now stablecoin. Like, we want our platform to process any type of payment anywhere in the world. So yeah, partnering with those providers is really key. And on the verification side of things, we're not trying to build it all ourselves. So our platform is there to do the workflow, the automation, but we plug into different data providers. You know, you've got the likes of SumSub doing like amazing things. They spent fortunes building some of the world's best verification software. Why would we go and try and replicate that? Let's just integrate and work and build around that kind of stuff.
When we talk about the future, what do you think the future trends or innovations are likely to shape the next phase of payments?
So with my Shape hat on, if that's okay, I like to think that the embeddable web components that we're building are really going to help the more traditional legacy acquirers, call them what you like, level up their go-to-market and compete with those, you know, tech-first disruptors that are not disruptors anymore. They're conquering the market. So it can help them maintain pace. But you mentioned AI. So we try not to follow buzzwords and things like that. Like, we didn't just want to say that we were doing AI just for the sake of it, because we didn't just want to add like a zero onto our valuation. So we spent some time. It's not a bad thing, but not just for throwing the term around. So with AI, we wanted to bring it to life in a practical use case, right? So we're going to be launching an AI assistant, which in really old school terms, it's broken into two parts. So one's an installation wizard. So our platform is all around automation, right? But to get it to automate, you first need to configure. So configure all your pricing plans, deduction plans, settlement plans, your onboarding rule set, which takes time. But this AI assistant will understand the PSP as they're going through their onboarding journey with Shape. So they will go and scan everything that we can find about that PSP as they're being onboarded, and then serve preferences to them in the platform. Say, oh, based on the verticals that you're looking to work into, we think that this would be a good risk policy to have in place. So we're going to make it really easy for them to configure our platform. And the other part of the AI assistant is an optimization wizard. We're not going to call them wizards, by the way, because it's old school, right? But this will be serving recommendations to them for payment processing. So for instance, I don't know, if you change this setting here, you could be making this much more money. Or if you were sending this transaction to this acquirer, you could be getting a higher acceptance rate. So we're going to be applying this AI assistant to help PSPs be more efficient in how they're processing and getting up and running. And we're trying to make configurable automation even more configurable. So when we first started showing the platform to PSPs 2 years ago, although we made it as configurable as we could, people always come out with, oh, it'd be good if that could be there. It'd be good if that could be.
The ocean, right?
Oh, yeah. But we've taken that and we kind of got annoyed by it at first. But then we thought, well, actually, there's some good stuff here. So we're now building more workflows into the platform. So the ability to be able to put a contract being served here, this verification check here, but this verification check actually happens here. So just making the platform more configurable. So they're the things that we're selfishly doing and working on, and happy to talk to people about those. But I mean, you guys would be closest to the action on this, but AI, agentic commerce clearly seems to be something that people need to be gearing up for. Seeing that all over my socials all the time.
I find it interesting when we talk about the term AI, because what you mentioned there, business was still trying to do it 10, 15, 20, 30 years ago, but we kind of call it machine learning or data analysis, right? It's doing the exact same thing. It's just trying to use more up-to-date AI to do it, right?
Yeah.
Well, it's the rise of the new platforms, right? And the scale at which they can do it, the speed at which they can do it. I think that's been the difference. I mean, agentic commerce, we talk about a lot as payment providers. It still scares me, to be honest with you. I mean, I was on a panel, a compliance event a few months ago, and I was kind of saying, you know, you see those examples where children get hold of a mobile phone and they go and buy a load of stuff on an app. Well, this is a whole nother level of that, right? If you remove some of the biometric layers that we've put in, it's protection for payment solutions in recent years, or OTPs, one-time passcodes, you now have a potential situation where a child can maybe get hold of that AI solution, and unless it's using voice recognition, I'm sure there'll be lots of stuff, considerations going into this, but it could be an enabler for more fraudulent activity, or, you know, we have to kind of take the benefit of it growing commerce globally and seeing more payment volume probably coming through our platforms as a result of it, but we'll also have to fight higher levels of fraud potentially as well, where fraudsters are using AI as a new tool in their kit as well.
Yeah, I agree. I think when I look at it with a payments hat on, I get really excited by all these things. But when I'm there as a consumer using AI to go and find me a new pair of trainers or something, like, it never actually really nails it. It never actually gives me, it gets you 90% there. I think even if you're using AI to create video content or photos, it gets you close really, really quickly, but then you still need to do a lot of work to get to that finished product. So trusting AI to actually make a purchase, I still think there's quite a long way. For me as a consumer, not Jack, co-founder of Shape, but as a consumer, there's a long way to go to being able to trust AI to make purchases for you.
In the payment space, though, you understand the fraudulent activities that happen.
No, I don't think it is. It's not. I'm not thinking fraud. I'm just thinking I don't trust a robot to go and buy things for me. Like I wouldn't let my kids have access to my wallet.
But would you have trusted 15 years ago for your card just to take you and buy something without you having to put your PIN number in or buy something online? Right?
I honestly would have, but I think there's like generational waves here, isn't there? So I never even thought twice when those things are coming out. I thought, yes, easy. You know, in payments, we talk about consumers wanting security, safety when they're processing payments. I don't think consumers ever really think about those things in our demographic, until it goes wrong. Like you post quite a bit around chargebacks and things like that. Like it's only when things go wrong do you care about, you know, your path of recourse, your safety, security. When everything's working, consumers don't care about payments.
Always consumer driven though, isn't it? Right?
Yeah, it's consumer driven. Yeah, everything. Like I think that's why if you look at open banking, the PISP side of things,
that's
really
exactly
struggling to gain traction, right? Sorry, I didn't mean to steal you.
No, it's fine. That's where I was going with it.
But if consumers, you know, if you look at open banking from a consumer point of view, if I'm going in to buy a coffee and I can tap Apple Pay and someone's trying to force me down the open banking route, like, why am I going to go down that path when I can already just tap my phone and walk out of there like really quickly? Like, what are you solving for a consumer?
Definitely.
Well, it would be remiss of us not to mention some recent news that we saw come out from you guys as well. So correct me if I've got this wrong, but you guys have been selected for the JPMorganChase Fintech Forward Programme. Can you talk a little bit about what that is, how it came about, and what it means for you guys moving forward?
Yeah, sure. So we thank you firstly, by the way, for calling it out. Since starting Shape, I've always looked at different accelerator programs, and I think one thing, we were able to raise a fair amount of capital quite early on, and a lot of accelerator programs are about kind of early stages. How can you create a pitch deck? How can you get an idea to get funding? And they always felt like we were a little bit too far on. And then you can look at others and they kind of lose focus. They're a bit too broad brush. And I never felt that they would actually do anything for us. And the JP Morgan one flashed up on my LinkedIn. And then a couple of people forwarded it to me saying, I think this one is really relevant for you guys. And the people that sent it, you know, I trust their opinion. I thought, okay, we'll throw our name in the hat for it. But the reason why, there's a couple of things that it's trying to set out to achieve. So it's really focused on small businesses in the UK. And we've spoken about software companies enabling thousands of small businesses to have better payment experiences. So I think that's something that's really core to our mission. And having the network that is JP Morgan, you know, shouting about what we do, I thought that'd be pretty cool to have. And they're really focused on the next generation of payment infrastructure. And that's a huge wave in payments now. Like people in payments are all about this infrastructure as a service, you know, having a processing ledger as a service, all those cool things. So we thought this is probably the most relevant accelerator program we're ever going to see. It's relevant for where we are in our funding journey. So it just seemed to tick all the boxes of what we need. And I'm not going to lie, like, although we're doing great things at Shape, if you go out across the whole world and say to people who Shape, we are still a very, very small business. So it's all very well building great capability, but if no one in the world knows about it, what's the point? So you need brands like JP Morgan to really accelerate your growth, to put us on the map.
And how involved is a process getting into something like that? You know, obviously you have to throw time and resource internally at putting your name in the hat for something like that. Is it quite an involved process?
I can tell you. So the process was an initial form, an online journey, which you fill in. The content, I don't know, we turned it around in a few days. Then once you get through that stage, there's a more deep dive. But again, it's an online form that you fill in. Then the final stage is an interview, which was half hour, which was quite, they basically told us what they wanted to cover. And I built a deck and talked them through everything they wanted to cover. And they had no questions at the end of it, which they're quite surprised by. So I think it was a smooth process. It was a sensible one. Whereas a lot of other accelerators actually isn't much of a process. I think if you put your hand up and say, we'd like to go on it, you can quite often get a yes. Like this was actually a closed door. It felt like a...
And how long are you in the program for then?
3 months.
3 months, okay.
So how do you see that kind of opening doors from the kind of new funding and growth of the business?
So the program itself, when you look at all the sessions, like it's really intense, lots of in-person stuff, but they're spending a lot of money on us meeting with some really good technology companies and product companies to help us advise on our roadmap, where we're going, to make sure that we've built our platform truly for scale. So it's not just around finding new partners to grow in terms of a commercialization point of view, or to find new investors, which they're doing a great job of helping us with. It's actually just to make sure we are ready for that next stage of growth through just their strategic expertise and things. But yes, we want access to their network. Clearly we do. We want to be talking to them as an acquirer, because we think surely we can be working together in some ways there. But everyone in the network, everyone knows JP Morgan, right? So we want to be talking to everyone that knows them, that might be interested in our solution.
It's a smart move for them as well, right? Because they get a look under the hood of lots of different payments fintechs
Is
as
it
well.
enough to buy kind of thing, right?
Well,
No,
yeah,
it's
as a
good.
starter.
It's really good. I mean, we're revealing information with them as part of this program that we would never normally reveal, like proper deep dive into our architecture and things. We're happy to share, because why wouldn't we? We want their help. We would never share that with anyone else. So yeah, you're right. It's a good play from them. And they're taking us to Slush in November as part of their
The Slush? What's the Slush?
the Slush.
In Helsinki?
Yeah, you know, you're just. Did I say the Slush?
I don't know.
Sorry.
It wasn't on my recent list, so
All
I'll
right.
check
Was
it
it
out.
not? Oh, so yeah, it should be on your list. Slush is basically where founders meet investors. So it's a huge startup community where loads of founders go, talk to loads of investors, and ultimately there's an aim of finding money. We went last year, but more just to kind of scope it out, see what it's like. But it is a really cool event if you just go and just to kind of see what it's all about, see where the next like phase of innovation are going. It's cool. But this year we're going to be attacking it, really trying to have some good solid conversations with investment companies and things like that. To
Maybe a new podcast venue for us.
There you go.
you would
yeah.
find some cool companies there, yeah, for sure.
And what does the next couple of years look like for Shape? What's your vision?
Global domination. No, that sounded really arrogant.
Okay, so Jack, you are the inaugural participant in our new end segment, the Shelf of Shame, where we invite our guests to, if you think Room 101 back in the day, old BBC programme, right? Anything that really grinds your gears, it can be in your own sector, payments, fintech, business in general. What would you like to nominate? Justin and I will then vote on it, and if we agree, it will go to the Shelf of Shame. They'll never return again.
You know me, right? Because we've worked together before. I whinge a lot about lots of things.
Correct.
A general one for me. So I've always been someone that commits to things, right? So if I say I'm going to do something, I do it. And I think you two are the same, right? We've worked together. We know how we work. But in the industry, it seems to be acceptable to say you're going to do something and not do it. And I think when you look at what that means in payments or in any company that's delivering technology and stuff, it's over-promising and under-delivering. And I think when you're looking at, if I can tie it back to embedded payments, hopefully you can see what I'm doing here, is when you're a software company wanting to embed payments, you're working with partners. And if people within those partnerships aren't doing what they say they're going to do, trust is going to fall down and it's just not going to work. So my thing to put on your shelf is people not doing what they say they're going to do. So I know it's not like a catchy one-liner, but for me it's really important, because why can't you just do what you say you're going to do? To me it seems really simple, but it seems to be that kind of business professional etiquette, call it what you want, is just lost on lots of people.
Do you think some people just get a little bit nervous of saying no? So they'll say yes, take it back, and then they'd rather ignore it than...
Perhaps. I don't think it's that.
Do you mean in a commercial sense, though? So
No, I
overpromising
mean in life in general.
So you're just saying over-promising in general is your nomination?
It's more just do what you say you're going to do. So less about promising. If you say you're going to do something, do it.
Okay.
Where does that sit with you? It's too weak for you, I can tell.
No, I think it's broad.
You said broad.
Can you not just tell us a buzzword you don't like?
Just take one for your initial list of 3 and we'll put that on the shelf. But no, I think I'm happy to put that on there. What about
you
you?
sure?
Put it on there.
Yeah,
stop
we'll
over-promising
we'll
and
put it on the
delivering.
shelf.
Imagine
If
the
we can
first
tell
one
the
was
rest of
like
the
a
payments
red
well,
button.
stop over-promising and
Yeah.
delivering.
I was worried that it
would
was
be
going to
happy.
be like a Graham Norton chair, the way if I didn't get it right, he's going to fire me back.
We could have done for that answer, to be fair. But anyway. Right, Jack, great to have you on.
Thank you very much,
for
Jack.
joining
Thanks,
us in
guys.
the
Appreciate
payment
it.
shed.
Thanks a lot. Bye-bye.
Well done. Thank you.